Today I'm going to show you a very profitable trading strategy. I have backtested this. I have more than 100 backtests and records of this. So this is something that I have backtested. You can backtest it if you like, and make sure that you understand it very well. In short, I'm going to give you the gold nuggets that you need to start trading, especially for beginners. If you follow the rules and you know what you're doing, you're going to be profitable in a very short period of time. It took me a lot of time. I learned this from a lot of Forex traders. I would say I would give it up to Raja Banks. It's a very good and a mentor that has shown me how trading can be a very successful venture if you take it seriously and you are disciplined and you have a trading plan. Now, before we continue, there are these rules that I need you to put down, understand them, and make sure that you follow them to the letter. Rule number one is you only trade trending markets. I've written them down for you. So if you like, you can also write them down and make sure that you follow them if you want to follow this strategy. It's a very profitable strategy. Watch the video up to the end if you want to understand everything. It's very powerful. In short, I'm giving you something that took me a very long time to come up with, to put together and to understand, so that you can understand it and use it for your own benefit in only one video. So the best you can do is just leave a like, subscribe, and make sure that you share this video to as many people as possible. With this pandemic, we need a lot of people to be financially free. Now, rule number one is we only trade a trending market. What do we mean by a trending market? A trending market should be either trending up or trending down. A market that is trending up, as you can see here, a market that is trending up as higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. We also have markets that trend down, and as you can see here, this is a market that is trending down. That's lower highs, lower low, lower highs, lower low, lower highs, and lower lows. We also have consolidating market. So what I'm trying to say here is this strategy only works in trending markets. If you get into the market and you can't see the direction in which the market is going, kindly just leave that market. Know that you can't trend such a market. Rule number two, the candle must break and close above resistance or support, above or below, depending on the market direction. If it's going downwards, it has to close below. If it's going upwards, it has to close above. And this is an example of a market that is going downwards. In this case, it has formed a support zone here, but this candle has broken and closed below this zone. That's what we are waiting for. Rule number three, enter on the break of the low or high of the previous candle. For example, this one has broken and closed. Rule number two has already taken place. Now, rule number three, you only enter if the next candle, which is this one, breaks the low of this candle, or if it was going up, breaks the high of the previous candle. So we only enter our sell after the break of this part here. That's the next rule. Another rule is if the previous candle has no wick, do not enter. Now, for example, in this case, if this candle had no wick, so that means there was no this lower wick part, or there was those. This is what we call the wick. If this candle had no this wick, we could have not entered this trade. This is something that we'll explain in another video, but this is one of the rules that is very important. It has been back tested, and if you follow this rule, I guarantee you might be lucky 1 or 2 times, but most of the time it doesn't work out. So kindly, if it has no this lower wick or it has no upper wick, if it's going up, do not enter such a trade. And another very important rule is if this is a scalping strategy, and if the market moves 15 pips and above, you move your stop loss to break even, secure a percentage of your profit, and make sure you leave the rest to go to the next resistance or support level, depending on the market that you're trading in. So those are the rules, and after these rules have been observed, let's go into the market and try and find out how this thing will operate in the real market. Now this is the market. Let me try and delete these ones. Now guys, this is very, very important. Pay attention and let's move together in this. Now, for example, this is a market that is trending upwards. You can see that it was trending downwards. This was the previous lower high. It has been broken. It has been broken. The market has come and is being held here. So we can comfortably say that the market is changing direction and is starting to trade upwards. Now let's look for a trade using our strategy. Now guys, as you can see, our strategy could have worked out here. This one is a resistance level that was created. This level was created as our resistance. This candle broke and closed above this resistance level. Now this other candle broke the previous candle's high, so could have entered a long trade here, my buys, and our stop loss should have been placed at least 20 pips below here. So in this trade, and our target should be 15 pips. If we get more, the better. So let's see how it played out. Now TP is hit. So this is very important, and that is why you put your stop loss below your previous candle. You see, this is where the previous candle low is, and this is where we entered. It came down, didn't hit our TP, and it went up. Didn't hit our stop loss, but it still went up. So that's one of the trades that I could have taken. Let's go and see if we can find another one. Same strategy. As you can see, this is also a support, a resistance level that was created in this one. This is also a resistance level that was created with this candle. This candle here broke and closed, but the next candle did not break the high of this other candle. So we could have entered on the break of this one. But it is very, very dangerous because, as you can see, this is a typical example of a candle that closed with no wick or a very, very small wick. So personally, I couldn't have taken this trade because I consider it very, very dangerous because the wick is very small or there's no wick at all. So I wouldn't have taken this trade. But as you can see right now, there's another level of resistance that has been created right here. And I would really, really want to be involved in this trade if the next candle breaks and closes above this resistance level. Let's see what happened. Now, in this case, I would have taken a trade here. We don't know if it's going to be a winner or a loser, but this is a category that I'll take any day, anytime. This is a setup that has worked 75% of the time, and it has always proven to be profitable. So if the next candle breaks the high of this previous candle, my stop loss is going to be here, and I'm going to aim for 15 pips. If I get my 15 pips, I close 80% and leave the rest to run to at least this level. This is the next resistance level. Let's wait and see, or let's play it and see what will happen. So in this case, we've already backed almost we're at 40 pips, so that means I could have moved my stop loss to break even, and I've left the rest to run to my TP. If it comes back and hits me at break even, then well and good. There's no problem with that. I've already followed my trading plan. Now this one could have taken me out at break even, but that means that I have to come back and look for another trade. Let's keep on going on and see what's going to happen. As you can see right now, what is happening is this one has come back to retest this level, and it is forming another resistance zone. So what I'm waiting is for the next candle to come, break this resistance zone and close, so that I can enter a buy and my target should be above here. Let's wait and see. But no, it has not happened. That's why I say it is very important to make sure that the next candle breaks and closes above it, and enter only when the next candle breaks the high or the low of the previous candle. Let's keep watching. Remember guys, we're only looking for buys. Reason being, we have already not we are on an uptrend. We haven't broken structure. This was the, if we break below this low, that means we have broken structure and we might be switching the market into a downtrend. For now, we're still on uptrend, and this is the structure that we are holding. And we make sure, if we don't break this structure, that means the market will still be going up. Now we are back to this level. This is a very, very interesting level to watch. And as we can see, if you can watch very, very closely, this one has broken above this level that we are watching. And now that it has broken above this level that we are watching, I might consider taking a trade right immediately if the next candle breaks above this one. So I'll put my stop loss or enter manually depending on how I want to do it, or the mood or the time of the day. My stop loss should come below the previous candle, which is there. So since this stop loss is very big, I'll prefer to go for a 1-to-1 at least. 1-to-1 at least. So I would say a 1-to-1 is there. So at this level, if I get to this level, I close 80% of my trade and I leave the rest to run. So let's say, for example, to the next point of resistance. Let's see how this could have played out. So my trade is triggered. I'm inside the trade. My stop loss is still at the same place. Now immediately here, I've already closed 80% of my trade. I'm leaving the rest to run. And boom, TP is hit. TP is hit. Guys, this one can work on any time frame depending on how you want to use it. If you are, for me personally, I usually use it on the 1 hour and 30 minutes time frame, and it has proven to work every single day and every single time that I try to use it. Also, you could have scaled in. You could have scaled in the same trade. For example, we have this here, this level here, that was a resistance level. A candle broke and closed above this, or you can even use this one that broke and closed above this. You could have also entered a trade here if you wanted to scale in. This is another trade. Stop loss is obviously below this one, and your TP is at least 1-to-1, or if you want to take the 15 pips and let the rest run. So this one could have also worked out. There's also another one here. This is a very powerful strategy, guys. Kindly like, subscribe, and share. Make sure that a lot of people get this knowledge. This is another one. This one has closed above this, but now I couldn't have taken this trade. Reason being, there is next to no wick on this other candle that was starting to go up. You see, for most of the times you'll get lucky. Not most of the time actually. Sometimes you might get lucky and it might work for you, but not all the time. Sometimes it doesn't work. For example, if someone was to take this trade downwards, this one here, this one has broken the low, it has closed. Now I want to sell. This one has closed with no wick. If a candle closes with no wick, according to the textbook, that means that it's a very strong candle. But according to the experience of traders and how we've been trading and the experience that we've collected from the market, most of the times it doesn't work. So guys, make sure you don't get caught up in such a mess or such a trap. I'll keep giving you more details on the strategy, but what I've shown you so far is something very powerful, very, very powerful. So if you're going to follow it, make sure you follow it to the letter. Write down the rules, subscribe, share, and this is